Financial markets. Explained how money moves around the world. Every day, trillions of dollars move through financial markets around the world. Money flows between investors, banks, companies, and governments at a scale that most people never see. But what exactly are financial markets, and how does money move through them? In this video, you'll learn what financial markets are, why they exist, and how they connect investors with businesses and governments across the global economy. By the end of this video, you'll also understand why financial markets are one of the most important mechanisms for moving money and supporting economic activity. Let's start with a simple idea. A financial market is a place where financial assets are bought and sold. These assets can represent ownership, loans, or contracts that depend on future prices. In simple terms, financial markets connect people who have money with people who need money. Investors provide capital, and companies or governments use that capital to fund projects, expansion, or operations. This exchange allows money to move efficiently through the economy. Now let's look at the main types of financial markets. One of the most well-known is the stock market. In the stock market, companies sell shares of ownership to investors. When someone buys a share, they own a small part of that company. Companies can raise money by selling shares, and investors can benefit if the company grows over time. Another important market is the bond market. In the bond market, investors lend money to governments or companies by purchasing bonds. As we saw in the previous video, governments issue bonds to borrow money, and investors receive interest payments over time. Then there is the currency market, also known as the foreign exchange market. This market is where currencies are traded. Businesses, banks, and investors exchange currencies when they operate across different countries. The currency market is actually the largest financial market in the world. There are also derivatives markets, where financial contracts are traded based on the value of other assets such as stocks, bonds, or commodities. These contracts allow investors and institutions to manage financial risks or gain exposure to different markets. So, why do financial markets exist? Financial markets allow money to move from savers to borrowers. Imagine someone saving money for the future. Instead of leaving that money idle, it can be invested in stocks, bonds, or funds. That investment provides capital to companies and governments that need financing. In this way, financial markets help channel savings into productive economic activity. Here's a simple example. An investor buys shares in a company through the stock market. The company uses that capital to expand operations, hire employees, or develop new products. At the same time, the investor now owns part of the company and may benefit if the company grows in value. This connection between investors and organizations is what keeps financial markets moving. Financial markets also help determine prices for assets. These prices reflect expectations about growth, interest rates, risk, and economic conditions. Because of this, financial markets constantly process information and adjust prices based on new developments. Understanding financial markets helps complete another important piece of how the money system works. Banks create money through lending. Central banks influence interest rates, governments borrow through bonds, and financial markets connect investors with all of these institutions. Together, these parts form the structure through which money moves around the global economy. In the next video, we'll explore another key part of this system: investment funds, including mutual funds, ETFs, and hedge funds. If you want to continue learning how money really works, subscribe to the channel and watch the related videos in the Learn Money playlist.